I'm going to be talking for the next 45 minutes or so about insurance for businesses, a type that can be described simply as marine insurance. Now, that includes cover for ships and for the cargoes they carry. And lately, by lately, I mean in the past century or so, marine insurance has included all sorts of other things, but I'll leave them out for now. Think about ships and cargoes when I talk about marine insurance. The first thing to know about marine insurance is that it's very old. It's been an important part of London's international financial services offering literally for centuries. Marine insurance arrived in London more than 250 years before Edward Lloyd started his coffee house, and about 150 years before the Royal Exchange was built. So it's old indeed. It did not, as legend has it, and some of you may have been misled to believe, start in the so-called Steelyard that was occupied by the Hanseatic League in the Tudor period. Instead, it started among the expatriate resident merchants of the Mediterranean who resided in London. Now, according to the earliest evidence that's been found, underwriters were laying down lines, as we would say in the insurance biz, at the latest by the 1420s, on which much more in a few minutes. But marine insurance still is even quite a bit older than that. Now, in this talk, I'll explain the origins of marine insurance in Italy, how it came to be that London began and continues to dominate the world in this important commercial sector. Along the way, we'll meet some familiar characters. We'll learn about great ruinous catastrophes that knocked over some of the people who were overexposed to marine risk. And we'll also see the way marine insurance is done in London really hasn't changed very much over the many centuries that this talk will cover. In so doing, I'll talk a bit about the law, so forgive me in advance for that. So the first, the earliest really solid evidence of marine insurance is found in the archives of the city-states of Italy, Genoa, Florence, Venice, the rest of those. The merchants of the 1500s called this region Lombardy. The merchants of London did, at least. They didn't distinguish between the places unless they were shipping there. The Lombards remembered in their street. And this is a picture of the very earliest known insurance policy. It was underwritten in Genoa on the 13th of February, 1343. With it, Amighetto Pinelli, who's described in this document as the free son of Giovanni. He insured 10 bales of cloth for Avedotto Guglielmi, who was a citizen and merchant of Palermo. The risk was 680 gold florins, the insurance value, covering the cloth while it was shipped from Porto Pisano to Palermo. The policy that you see before you has all the essentials of modern insurance. It promises to repay the law, indemnify, to repay the insured party's actual losses. It does so in exchange for a fee, which is the premium, which is expressed as a percentage of that sum insured, a percentage of that 680 gold florins. It has to be paid in advance. So here the insurance is recorded in Pinelli's document copybook rather than in the actual policy, which is why it survives. Policy long lost, no doubt. And so apparently mature the mechanics of the insurance language used in this policy of 1343 that historians who study this stuff, and there are a few of us, could only agree that it wasn't experimental, but it was an example of a financial instrument which had already been in use for some time, so a few decades at least, allowing us to say that the earliest insurances were around 1300, 1320, possibly earlier. Here we go. Now, in the 13 and 1400s, Italians were the masters of world trade. I mentioned the Germans of the Hanseatic League. They controlled the lucrative business of bringing goods down from the Baltic Sea to the rest of Europe. But it was the Italians who had the gold. They had their Mediterranean access to luxury goods from Asia and North Africa. And they also set the standards in trade for all of the merchants in the world, at least the European world we're talking about today. Well, it was no business for the faint of heart. Trade in the early age of sail was fundamentally precarious, unpredictable, fraught with peril. Merchants often had no choice but to bear the dangers, run the risk, they call it, of naked threats like hurricanes. Now, at the worst, these could mean the complete destruction of an entire season's invested capital. It would spell the ruin for an individual merchant adventurer. The rage of the oceans often caused the total loss of vessels and their cargoes, or it could inflict extensive damage to them before goods reached markets. These natural perils were known in early policies as the risks of the sea, of maris. But then also, to make it worse, there was the violence of men, gentium. That came in the form of warships and pirates and privateers and corsairs. They could present an even greater danger, especially in wartime, when human risks to trade were recurrent and quite severe, grave. And at their height, enemy onslaughts against seaborne trade could endanger the whole commerce of a country. And that would imperil not only its military success, but potentially even its independent survival as a nation. So to Italy, Italian merchants began to deal with these very real problems. We need to only think of Antonio, the merchant of Venice, who made his wind upon his soup and thought about his ships. That tells us how real it was. At some point in the late 1200s or perhaps the early 1300s, men like Antonio invented marine insurance. The research that shows this was undertaken by historians in the 1880s and 1930s to individuals particularly, and it leaves little doubt about these Italian origins. Genuine insurance was a product of the late medieval commercial revolution. Well, that took place in Italy, in northern Italy, in the half century from about 1275 to 1325. That's exactly the period when I've tried to show that insurance was invented. And this revolution also saw some other things that are still around today, pretty much unchanged, including double entry bookkeeping, the kind that's used by everyone, everywhere in the world today, and bills of exchange, which are still the basis of trading money across border, and even sort of the common check from your checkbook, although not so common today anymore. Now, inventing marine insurance, these Lombard merchants figured out the most effective and efficient means of minimizing the impact of the threats to trade presented by seas and by men from maris and gentium. The financial instrument they designed would spread the cost of losses at sea as widely as possible amongst the merchant community, and thus ultimately among the end consumers of the internationally traded goods they sold. And you know what? It worked remarkably well. Excuse me. Now here's the plug. Here's a little graph from my forthcoming book, which Mike so kindly mentioned and let me talk about. Insurance is characterized both by what it does do and what it doesn't do. At least it was when it was invented. And it's a logical evolution of several medieval instruments, which also were used to finance merchants' sea voyages. So insurance provides a kind of capital that an economist might call contingent capital. So unlike a regular investment or a regular loan, which provide capital, Insurance money is delivered only when a certain event occurs. But to begin with, this division between contingent capital and operating capital wasn't made. And the Italians, of course, realized the great dangers of shipping by sea. So they built contingency for them into their system for loaning money to merchant venturers. The basic kind is the sea loan. The sea loan allowed merchants to borrow money with the stipulation that if their ship sank or if their goods were lost at sea, the loan would be forgiven. Those sea loans are really old. They're mentioned in Demosthenes wrote about them, who was a contemporary of Aristotle. And in one of the earliest examples that I know of in this context of state intervention into markets, the Byzantine Emperor Justinian fixed the price of sea loans at 12% in the year 533. And the Romans had them too. They called them nauticum finis. Variations on the structure, such as the Italian cambicum nauticum, had a third quite important function. They allowed investors to loan money to merchants at interest, which was prohibited under the usury laws of the church. And the interest on the loan was disguised as a risk premium. And the scholars of the church deemed this sort of transaction acceptable in the eyes of the Vatican. So it too had the double effect of forgiving the loan and covering the risk, a sort of pre-insurance, as well as the advance of capital. There's so much for ancient history. The earlier financial instruments provided merchants with relief if, as this early English policy states, it's from the 1550s, if God's will shall be that their ship shall not well proceed. But all of these had the same drawback. The buyer had also to be a borrower. Marine insurance disconnected insurance from borrowing. And as trade expanded, marine insurance took off like a rumor on Twitter. For example, in just 3 weeks between the 21st of August and the 15th of September in 1393, the Genovese notary Theramus de Maholo was involved in more than 80 insurance transactions. And already by this time, as I've said, many of the contemporary practices of marine insurance were adopted and beginning to be perfected. Those include multiple underwriters participated in each policy, as happens now at Lloyd's. Each assumed a portion of the sum insured to spread the risk more broadly. The policy on the screen shows this. You can see the bottom section, which is divided into little sections crossed off. Each one of those is an underwriter. They've paid a claim, and the X marks the claim to have been paid. The fact they put this below the text of the contract is what makes him an underwriter, or in Latin, a subscriber. This vocabulary is much more widely used now, but it originates from this kind of document. Now, these early underwriters charged a premium, which was expressed as a percentage of the sum insured, and which varied based on the characteristics both of the vessel and of the voyage. And if it was relevant, if it was a cargo policy, sometimes on the nature of the cargo. So, for example, perhaps counterintuitively, it was cheaper to insure gold than it was to insure wheat. But if you think about it, gold isn't damaged if a lot of seawater gets sloshed over top, so that risk is removed. Rates were also adjusted according to the loss experience of the insured. If they sank if they regularly screwed it up, they paid more, just like with our motor insurance today. They were also adjusted for various threats related to a specific voyage, the season, the activity of corsairs and pirates in the region it was sailing to name just a couple of them. The underwriters specified the broad perils which were to be insured under the policy, and included in the contract the name of the insured vessel, the nature of the cargo, and the details of its voyage. Policies were often arranged by intermediaries or brokers. Most of the underwriters were merchants themselves, although by the 15th century, wealthy investors were also taking a line on insurance policies. Another similarity with the modern is that insurance salvage rights were established in principle at this time, if not in law. If something is lost and paid for by an insurer, a vessel, for example, title to that vessel goes to the insurer should it be recovered. And you can see that in this policy, another thing was already established, at least by 1555 in London, and that's insurers' preferred recourse to arbitration when a dispute under a policy arises. As they've said here, if that happens, they promise to remit it to honest merchants and not to go to law. This map will be familiar to all of you. You'll know that London was relatively unimportant 18th century. Some wool went out, some consumables went in, but London was no great powerhouse yet. Notably, though, Lombard Street was already clearly established at the time in exactly the same place it is now. This is where Italian merchants managed their trade with Southern Europe, as well as their various banking affairs. It's in the transactions of these Italian merchants, the traders of Lombard Street, where we find the earliest evidence of marine insurance in London. The records of businesses and the courts have preserved the clues. The prize for the oldest surviving record yet found related to London insurance must go to an entry in the plea rolls of the City of London. In 1426, a chap named Alexander Ferrantyn, who was a Florentine merchant who lived in London, took an insurance dispute to the Lord Mayor and its aldermen. He'd purchased insurance from some other resident Italians, and a disagreement over a claim had erupted. Now, Ferrantyn's case was heard in the Guildhall when he was refused a claim for his vessel. It was called the St. Anne of London, and it was carrying a cargo of wine to England from Bordeaux. It shows the Italian dominance of trade. Neither English nor French are moving this French wine to English customers. Now, when like this, both the vessel and the cargo had been insured for £250, which at the time is an enormous amount, as you know, by 17 Italian merchants who were all resident in London. The assets had been seized by Spaniards, the ship and the cargo, but Ferrantyn, through an agent, had managed to buy back the vessel and the cargo, which the privateers, the sort of licensed pirates of this age of plunder, had sold on to some Flemish merchants. And the policy specified that the order, manner, and custom of the Florentines was to govern the contract. Well, Ferrantyn asked his insurers to pay up, and he cited the clause about Florentine custom. The insurers, thinking you've got your ship back, say, well, there's no claim to be made. And in any case, if they do pay the claim, they want the ship. He's not going to end up with both. But what's clear so far is that in these early days of London insurance, accepted local practice was underdeveloped, or it carried little weight. Instead, we wanted to see what the Florentines would have done in this situation. As we'll see later, London practice evolved and went on to govern much of the world's marine insurance as it does today. But back then, the disputing parties claimed respectively that Florentine custom required the indemnity to be paid in this unusual circumstance, but it didn't. Now, both parties promised to get some notarized testimony from merchants in Florence, which would outline the prevailing local custom. And the insurers were so confident that they were right and that they wouldn't have to pay, that they paid the disputed £250 into the court, plus another £100 as surety. Now, I'm sure you're all anxious to know the outcome of this dispute? Sadly, the record does not say, sorry. Well, Ferrantyn's insurance buying wasn't isolated. It's not a one-off. Here's another example. Filippo Borromei and Company of Bruges in London was just one bank of many. London was a branch of Bruges in an extensive network owned by the eponymous Italian merchant banking family. And its ledgers survive. They're still held by the family in Italy. They show that the London branch of the Bruges Bank made regular and routine insurance transactions in London in the 1430s. For example, just one out of many in the book, on the 10th of January, 1438, a clerk in London wrote down a transaction that it had made with the Bruges Bank as follows: credited to their account for cloth for 50 pieces of Essex Straits. That's a huge broadcloth, more than a yard wide, which we bought for £31 5 shillings, insurance at £1 16 shillings 8 pence. Adding more interest to this fantastic record, the identity of the underwriters of these policies is sometimes included. And the Borromei Ledger refers to insurance underwritten by us on the cargo and ship of Giovanni Tanso. Now that shows that the bank would sometimes act as an insurer itself, assuming insurance risk, which was typical. Buyers of insurance were often sellers too, and a good risk was a good bet. And the bank's Bruges partnership, in its ledger of the same years, actually names the underwriters in London. They include 3 individuals and 1 partnership, and they all seem to be Italians by their surnames. And in the Ferrantyn case, the 17 London merchant insurers named as defendants include 2 who are known and were known to be natives of Venice, 2 of Genoa, 2 of Florence, and 11 others, all clearly Italian, but whose identity is unknown beyond their name. Now here's some Aldermen. In 1480, 2 of London's leading Italian merchants took an insurance concern to the mayoral court. Antonio Spinoli, who's another famous Italian merchant in London, famous merchant family, was from Genoa. He lived in London. His English attorney appeared before the Lord Mayor and Aldermen with him. Spinoli wanted simply to attest the receipt of an insurance premium of £6 13 shillings and 4 pence from the local merchant Marco Strozzi, another well-known Italian merchant family. The policy by this time is described as a bill of assurance, which is the first reference I've seen to that word used in this context in English. And sadly, the bill had been lost, and that's why he was there. Also, I think it's really interesting to note in this slide how the fashions of a well-dressed alderman have changed between 1515 and the 100 years later, just after the Glorious Revolution. More importantly, for my topic, it's safe to conclude from all this evidence that the community of Italian merchants in London, insured regularly in the early 15th century, did so primarily amongst themselves. They comprised London's earliest generations of merchant insurers, and what they did was typical of its time. Now, as soon as you get insurance, you get insurance fraud. The Great Chronicle of London shows us that it happened here too. Dishonest buyers would sometimes attempt to defraud their underwriters. Now, the Chronicle was written, we know, at some point before 1509, although we don't know quite how much before, but it has this marvelous passage that talks about a rogue trader who decided to stuff ships with false and crafty balances, such as blocks and stones, and counterfeit dalliances, and after insure the said ship with their freight for great sums, till they come on the height of the ocean, then cause them to drown, that the insurance might for naught be paid. Now, apologies for the terrible quality of the verse, but no apologies for the passage showing clearly that underwriters have always been imperiled by the unscrupulous. although in this case, according to the Chronicle, the fraudster was caught. A similar fraud was recorded by Samuel Pepys in his diary about 150 years later. A trial was held again at the Guildhall in 1663 before the King's Bench this time. According to Pepys, Lord Chief Justice Hyde, with all the greatest counsel in the kingdom in the case, had heard how an unnamed ship's master overinsured a ship laden with bogus cargo that was worth at most £500. It was a notorious deception. The cargo was actually vessels of tallow daubed over with butter instead of all being butter. The criminal had abandoned the ship and let it to flounder on the rocks at low tide. He'd refused aid from nearby ship's pilots who came to help. The judge found in favor of the insurers, one of whom happily had salvaged the ship, uncovered the fraud, and later repaired the vessel as well for just £6. Of interest here as well is that the dispute was argued by, in the words of Pepys, all the great counsel of the kingdom. Makes me wonder, why did an insurance case attract all the very best lawyers? Leave you to think about that one. The disputes in practice rarely reached the courts, but when they did, they often left extant documents, far more than policies which went off as planned, whether they had claims or not. The earliest policy I found exists in the records of the High Court of Admiralty, which is a bit of a trove for insurance documents of this period. And the policy you see before you, the Brook Policy, was underwritten in 1547, and it reveals much more about insurance in our city and around this time. The policy was written in Italian, but the buyer, John Brooke, and the underwriters, William Maynard and Thomas Lodge, clearly are not Italians. Now, it was common, we learned from other evidence, for policies at this time to be written in multiple languages for the convenience of merchants involved in multinational trade. In this case, the cargo, which was a shipment of grapes from Crete, was being transported from the island to London on board a Venetian ship called the Santa Maria. And the fact the carrier was Venetian perhaps explains the language of the policy. And the insurance covered, interestingly, only the portion of the journey from Cadiz, perhaps because that was pirate incident at the time. Also of particular interest is the clause which governs the jurisdiction of disputes for this policy. Now, remember that the Ferrantyn policy was governed by the customs of Florence. Here, 121 years later, the policy states clearly that, I quote, "It is to be understood that this present writing hath as much force as the best made or dicted bill of assurance which is used to be made in this Lombard Street of London." So the particular custom which was to govern the policy was that of the merchants of Lombard Street. Incidentally, the phrase dicted bill tells us something too. It suggests the validity and probably widespread use of verbal contracts of insurance at this time. So imagine 10 merchants sitting in a pub together and all at once agreeing to cover Antonio's latest voyage for 50 ducats each. That decision also would carry the full weight of their customary law. Bear with me. The choice of governing law seems to have been rather flexible. This policy was issued in 1552 to insure the Florentine merchant Robert Ridolfi. Yes, the same one. He's best known for his plot to assassinate the Queen, not for his insurance affairs. This policy also mentions only Lombard Street, but it's got something curious with it. It's another that's come through the courts, and it has a sort of expert opinion attached to it that states that the use and custom of making bills of assurance in the place commonly called Lombard Street of London, and likewise the Bourse of Antwerp, is in time out of mind hath been, blah, blah, blah. So this hints that Antwerp custom was still being taken into account by the courts, if not by the merchants who didn't put it in the policy. One of the reasons merchants preferred arbitrations to the courts is the courts were usually a little bit behind. They didn't really know what was going on at all. But I won't talk too much about the law. I will say that a further policy drawn up in 1555 to ensure the Portuguese merchant Anthony de Salavar, and that's the first policy I showed you early on. That makes the Antwerp connection directly and states that this assurance shall be so strong and good as the most ample writing of assurance which is used to be made in the street of London, that's Lombard Street, or the Bourse of Antwerp. So sometimes it's in the policies, Antwerp, and sometimes it's not. Meanwhile, a 1566 policy underwritten in the Flemish city refers to London's authority and Lombard Street of London. Now, it's my proposal that this flexibility allowed the rules of insurance to change with the times and allowed merchants to choose the governing jurisdiction with which they were most comfortable. Forgive me for talking about policy language a little bit more. The force and effect clause continued to change. So here in the late 1570s, at the top, in a fine secretary hand, we see how it was adjusted by a man named Richard Candler. I could talk to you about Candler for hours. He began to loom large in London's vibrant insurance market in the decade of the 1570s, because that was when he was granted a royal patent, which gave him the exclusive right to, and I quote, the making and registering of all assurances, policies, and the like upon ships and goods going out of or into the realm, made in the Royal Exchange or any other place in the City of London. Now, Candler had opened his office in the Royal Exchange, and uniquely, it was the only one that you could enter from inside the exchange. All the other shops on the ground floor had only doors onto the street. The surviving policies underwritten while his office, which was the Office of Assurances, was in operation, state that his policy had the force of the best and most surest policies to be made in Lombard Street or now within the Royal Exchange in London. Well, that phrase is written in secretary hand in 1582 in the excerpt you can see on the top of this slide. Candler, it seems, was setting out his authority. His law was as good as that of Lombard Street or the Bourse of Antwerp or Florence or anywhere else. When the Office of Assurances faded from the picture, sometime after the 1688 revolution, the clause changed again to cite only Lombard Street or elsewhere in London, as shown in the second excerpt. However, the authority of the custom of the Royal Exchange was permanently to return even before Lloyd's moved there in 1771. So here I'm showing you at the bottom a policy underwritten in New York in 1760, which states this writing or policy assurance shall be of as much force and effect as the surest writing of policy, blah, 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 in Lombard Street or in the Royal Exchange or elsewhere in London. And that exact clause is still included in marine insurance policies issued today by Lloyd's of London and other insurance companies in London, as in the third excerpt. Oh, yes, sorry, I'm not looking at my screen. The third one, the typewritten policy isn't from 1760. This clause of force and effect even appears in the sample form of policy that was included as a schedule to the 1906 Marine Insurance Act, law being made into, well, customary law being made into the law of the land, I would say, by way of example. So, another kind of clause. This is the entirety of that Corsini policy that I showed you, underwritten in Richard Candler's office. It bears the signature of Richard Candler, and you can clearly see below the main body of the contract the names of all the underwriters, and the verso in the smaller picture have their amount on the left-hand side. You know, it's be very small on your screens, but you can see that it says £100, £100, £50, £50, £50, with their names and the very same wording each of them will have said, I content to assume, and on it goes. And at the risk of boring you with more policy language, Candler had an impact because he standardized the language of policy because of his monopoly. The Florentine policies from the late 15th century, like this one, specified specific perils: God, the seas, men of war, fire, jettison, detainment by princes, by cities, or by any other person, reprisals, arrest, and whatever loss, peril, misfortune, impediment, or catastrophe that might occur. Fairly all-encompassing. The policy on the screen now, underwritten 200 years after that, sorry, a bit confused, on the screen, 200 years later than that Italian listing, Florentine listing of perils I just read to you. The one on the screen now was underwritten 200 years later than that one in Candler's office at the Royal Exchange. Now, why is that interesting? Here's a closer look at it. The 1582 policy bears a remarkable similarity to the Florentine policies of 200 years earlier. It covers the buyer against the seas, men of war, fires, enemies, pirates, rovers, thieves, jettisons, letters of marque and countermart, which are a note you can get from the government to say you can sack enemy ships as a pirate would, arrest, restraint, detainment of kings and princes and all other persons, barratry of the master and mariners, which is embezzlement effectively by the captain of the ship, and all other perils, losses, and misfortunes, whatsoever they may be, or so howsoever the same shall chance happen or come to the hurt, detriment, or damage of the insured cargo or vessel. Here are two more policies. The earlier was underwritten for the well-known merchant Ralph Radcliffe in 1716. The latter for the Baltimore Steam Packet Company in 1950 in the underwriting room at Lloyd's. Now, perhaps you can predict what they say. I won't read it out a third and fourth time. Even in 1950 and beyond until the 1980s, London marine insurance policies insured against the seas, men of war, fires, enemies, pirates, rover, etc., etc., etc. But let's slip back to history. We can see from information in this document and similar ones that marine insurance was remarkably well developed in London long before Edward Lloyd opened his coffee house. But Candler didn't get his monopoly without a fight. Men complained, particularly the brokers and notaries who'd been established for some time as the people greasing the wheels of London marine insurance. They did what 16th century merchants usually did when they were aggrieved. They petitioned the Lord Mayor. Some of these petitions survive, such as this one, in which the notaries public complain wryly that should the patent be granted to Candler, not only would they and their families starve, but that Candler himself would be made some sort of notary private. Together, the petitions tell us that in the 1570s, roughly 30 brokers and 16 notaries operated in London's marine insurance market. The former group facilitated the introduction and interaction between the buyers and sellers and managed financial relationships. The latter, the notaries, drew up policies, kept registers of their details, and managed client monies. However, merchants and their insurers sometimes dealt directly with one another without intermediation and notaries. And in many ways, the division of responsibilities in the market, although it was smaller, was almost exactly the same as it is today. It does seem, however, that a century of dominance by the Office of Assurance knocked the notaries out of the insurance business, so they were right to be afraid. Similarly, the market was physically the same as it is now. So record of insurance transactions made in 1654 survived until the late 19th century in the Rolleston manuscripts at Oxford's Bodleian Library. The transcription was published in 1876. The document was almost certainly the record of an underwriter. It showed insurance policies were written at addresses including Bartholomew Lane, Crutched Friars, Mark Lane, St. Helens, Threadneedle Street, all within easy walk and all in the heart of London's insurance district. I mention the transcription only in part because it's lost. I learned after 2 days of searching at the Bodleian that this fascinating source has been missing since at least the 1890s. What a shame. bit about Thomas Gresham. Richard Keeler was probably familiar with marine insurance long before he got his charter, if only because he was an agent of Thomas Gresham. And while in the Netherlands, the Royal Exchange founder was tasked principally with managing the monarch's crown debt, but he also helped successive monarchs in other ways, sometimes by providing imported arms and armor for his kingdom. It was his primary private trade. And in 1560, for example, he directed his local agent to load gunpowder with 9,000 pounds onto several ships and to have them insured. Gresham had 2,000 worth of goods loaded onto each ship, dividing them up to limit his risk. And then he additionally purchased insurance for 1,000 for each of the vessels. He'd asked also for additional protection to ask the naval masters to convoy the ships, but they refused. The cost of cover wasn't recorded, but a later shipment of armor and saltpeter, which he sent from Antwerp to London, paid the rate of 5% for that short voyage. So it seems the Queen was sometimes risk averse, not wanting too much materiel to go on the same ship. This led Gresham to send military kit to the English crown on his own account, and when he did so, he was sure to get sufficient insurance cover. He wrote, "I've adventured upon my own head 1,000 pounds more in a ship, which I've caused to be assured upon the Bourse of Antwerp. So I trust in God it shall most plainly appear to the Queen's Majesty I've done my duty and diligence." Here's another famous chap. Daniel Defoe. Before he became a writer in the years after the Glorious Revolution, his name was simply Foe, and he was a struggling merchant. Perhaps he was lured by the large rates offered during wartime. I don't know, but he began dangerously to dabble in marine insurance underwriting without really knowing what he was doing, and it was a grave error. He lost everything in the business after a great naval disaster, which was described by contemporary parliamentarians as the miscarriage of naval affairs. It was the summer of 1693, and the combined Anglo-Dutch Mediterranean trading fleet, 400 ships, much larger than usual. There hadn't been one to Turkey the year before. And on 27th of June, at the First Battle of Lagos, the convoy was overwhelmed by French privateers. 21 Anglo-Dutch naval escorts sent to protect them were elsewhere. And although roughly 3/4 of the vessels escaped, 92 or more merchant ships worth £1 million or more were captured or destroyed, and much of the loss, including the Dutch loss, was insured in London. This event is known as the Smyrna catastrophe. We're running out of time, so I'll skip some of this details. Message me if you want to know more about this. In any case, suffice to say, a bill was brought before the House of Commons on 22nd of February 1693, including the name Daniel Foe, merchant insurer, that helped, was an attempt to make good the loss of any insurers. The bill failed. Narcissus Luttrell, that great terse chronicler of the affairs of London, said that the Lords have flung out the bill for merchant insurers. A couple more slides if you want to bear with me. Another underwriter ruined at Lloyd's. Just well, the London market endured, but new men with new money came in, and some went on elsewhere. John Walter was a coal trader and became a merchant insurer, and shared risk by underwriting colliers at the old Lloyd's since the 1770s. He joined New Lloyd's in 1781 and dangerously extended his underwriting. Almost immediately, he was, in his own words, weighed down in common with about half of those who were engaged in the protection of property by the host of foes this nation has had to combat in the American War. So Walter was forced from his home, sold his library, and he managed to clear his debt only in 1790. And if you're not familiar with him, like Defoe before him, he changed his career, not his name, and in 1785 launched the Daily Universal Register, a newspaper which today we know as The Times.
One more famous journalist underwriter. I've got a soft spot for them as a scribbler myself. Walter Bagot. Little is known of his underwriting success, and he wrote little about marine insurance. But like these individuals, London Marine Insurance was resilient. It frequently overcame obstacles such as fearsome attacks on its reputation and continued to survive. I've got not much time left because my lecture is longer than I thought. I would be happy to take questions, carry on with the lecture, or do very much as Mike, you choose.